Okay, let's make a start. Many thanks for joining us. Many of you have been to one or both of our previous webinars, and for those of you who are joining for the first time, welcome. Today we're talking about the right customers and prospects, and making sure that you're able to find them and service them profitably and in the best possible manner. Just very quickly, to introduce myself, I'm Andy. I lead Better, Faster Growth, have a background in the travel industry and consulting. For the last 10 years, exclusively sales and marketing effectiveness for private equity, portfolio companies, and other organizations. Wayne, do you want to say a couple of words?
Thanks, Andy. Wayne Tessier. So I've been at BFG for a few years now. And prior to that, I've been in largely commercial leadership roles. Half of my career spent with Mars and the other half spent in private equity backed businesses, mainly in the service sector, both food service and coffee service. Nice to see you all.
And hello, all of you too. Marek Izmailovich, for those who don't know me. So my career before Better, Faster Growth has been mostly consulting, so commercial effectiveness, sales force effectiveness type work. Carney, ZS Associates. I've also been involved from the early stages in a couple of tech startups, which received VC and private equity investment. So we'll just try to look at it from that point of view of the growing pains of companies going through different stages.
Thanks, Marek. And if I could just ask, if you wouldn't mind turning your camera on, if you're able to do so, it just makes it much easier for us to see whether you're falling asleep with boredom, looking confused, need something clarified. It's just a lot easier. And I know you've run your own Zoom calls and will be able to relate to that. So just very quickly, today is the third webinar in our series, Prioritizing the Right Customers and Prospects. Each Friday, we're tackling a different topic from our dimensions, and there are 9 further webinars, 9 further Friday webinars to come. So please put Friday 1 o'clock in your diary through 13th of December. Just to recap for those of you who are seeing this for the first time, we look at sales effectiveness through 12 lenses or dimensions. We say that to be truly effective, a sales and marketing team has to be focused, engaged, and enabled. And crucially, it's not enough to be any one of those. We often are told that sales team effectiveness is about the patter of a rep in front of their customer or prospect. And yes, that's super important, but that's one aspect of competencies, which in turn is just one of our 12 dimensions. And as we go through today, focusing on the right customers and prospects, it will become very clear that you cannot nail that in isolation. There are so many other aspects that come into play in order to be able to effectively address the right customers and prospects. And just briefly, because again, many of you will have seen this before, each of the 12 dimensions on its own and together with the support of others has the ability to make a tangible difference to the outcome of your business. And focusing on the right customers and prospects can have very quick results, very quick outcomes, especially if you're able to address the long tail, which Marek is very shortly going to introduce as a concept. We can see very quick results there. Just hand over to Marek now, who's going to lead most of this discussion today.
So, as Andy said, we're talking about customers and prospects, and I This is not an uncommon conversation between a sales rep, account manager, salesperson, and their manager. You know, coming into a review meeting saying, "I've nailed it. I've absolutely nailed it. I've sold lots of stuff, penetrated lots of accounts. It's, you know, just give me the money. Fantastic." It's like, well done, well done. Yeah, but there's this big account. It's really strategically important to us for a number of reasons, right? It's not actually just the sales, you know. Um, you haven't actually got started with that at all, as far as I can tell. It's like, oh, okay, right. Maybe next cycle, right? Okay, I've made real progress at this big account. You know, we've had conversation, making inroads. They're really interested in what we could do for them. Again, well done, very good. Yeah, but you're 50% below your sales target. Oh man. Um, you know, targeting is not easy. So, you know, thinking, well, what should I do? Where should I go? What should I do? So, you know, if I think about my target list here, you know, I've got company A, it's small, they know our product. They like it. They've approved it. It's great. You know, I could go there and sell there. Company B, you know, we've got great relationships there historically. I can go there. I can get as many meetings I could possibly want. If I've got call targets, I can fill them all up with this company. But you know, they've had some changes. The CEO's come in. You know, he came from a company where they had bad experiences with us, and I really don't know. You know, what I should do there. And then company C, we really want to get in there, but they've signed a tender, 2-year tender with a competitor. You know, should I be spending my time there now? Maybe in 2 years' time, but now, what should I really be doing? And I'm sure you're all familiar with these sort of, you know, this is, you know, not quite a made up scenario, but it's pretty representative of what goes on. And really, when it comes to customer targeting, where, you know, it's not just about quantity, you know, where should I be making my calls? You know, what company should I be covering? You know, maybe what channels I should be using, you know, to be more effective of my time. You know, there's an element of, call planning and all that kind of stuff. And it's not just about quantity. Targeting, it's not just a target list, it's about quality. So also, where should I be thinking more strategically? A basic call plan might be appropriate with some customers. Where do I need to start investing time where I'm not even with the customer on account planning? Where do I need to bring more people in from the company? You know, well, what is it? What is it this customer really needs from us that I can't bring in myself? Maybe but I need to as an account team. Where might we need to invest? Customizing, really understanding what the customer needs. So, in other words, you know, there's no one size fits all, really, typically. I mean, perhaps it is sometimes depending on how narrow your product and type of customer base is, but generally, there's no one size fits all. So I'd like to ask you a question for discussion, and please either drop this in the notes in the meeting, or there's not that many of us, so you know, please do just speak up. Question here. What sales cadence is right for your business and markets? And I'll be interested to understand why. So lots of new deals, customers each quarter, coming in. B, you know, various size customers, you know, probably added every, 6 to 12 months, that sort of cycle. Or is what's right for you predominantly longer term account management with new, presumably big customers, maybe acquired every year and a half, 2 years, that sort of cycle. So yeah, any comments coming through? Any thoughts?
Yeah, keeping an eye out. We've got Dave Mosscrop. Thank you, Dave. Dave would like a mix, mainly B. So various size customers added every 6 to 12 months. And what's she thinking there, Dave? Just out of interest.
Well, I mean, as I mentioned the other week, really, I think it's one of those things where you can wait sometimes, as you put here, a year and a half to land a big fish, which might be 10% of your turnover. But there can be a lot of effort going into that for not a lot of margin at the end of the day. And in order to manage business growth more incrementally, I'd rather see businesses, I suppose, where I am now, around 1%, 0.5% of turnover, if we could land one of those quite regularly, that would be much easier to cope with and easier to plan for from a resource perspective.
Yeah, yeah. And are you considering capital intensity and things like that as well when you're factoring that in, or is that not the nature of your
professional services at the moment? So it's more about, but therefore it's challenging to recruit 10 people to start work in a month's time.
Yeah, yeah, great. Thanks, Dave. Adrian, thanks for that. You've come in with a mix of all with a higher success rate. Yeah. And again, maybe Adrian there, if you want to speak up, what's sort of in your thinking there with the mix?
Yeah, so I'm a management consultant and a sole trader. So what I'm looking for is to get deals over the line, whether lots of frequent work or maybe going for that larger deal that's going to be in 1.5 to 2 years' time. But it's not about going for any one particular type of cadence. It's about making sure that I pick the right customers in Group A, Group B, and Group C. So, going after the predominant account management for the larger customer is fine. But if I spend 2 years on the wrong customer, then I've wasted my time.
Yeah, yeah. And you've also got to resource it as a sole trader as well. Great. Thanks, Adrian. And Ben has also come in, Marek, with B. B seems to be the choice of the day. And Ben said there, due to BPO our outsourced market nature.
Yeah, typo on there. Sorry, Wayne. So, yeah, the nature of the market, the big, slow deals and just finite resource, it's falling within B traditionally, but obviously I'd love to see A every quarter.
Okay. Okay. So that's where you're at currently, but you want to move to A. Right. Thank you, Ben.
So thanks very much for the comments. The interesting thing is that, as Andy was saying, these 12 dimensions don't sit in isolation. So, to achieve whether it's A or B or C or a mix, we'll get around to this in a different webinar, or 2 different webinars, in fact. But there's a the big enabler for this is your organization aligned to this with the right skill sets? Are the incentives directing the right kind of targeting, the right behaviors from the teams to go after the right customers as well? But yeah, thank you. I mean, it's not uncommon to go for B. It depends on the industry, right? It depends on the sales cycle of the customers and what's appropriate. But it's scary to wait for C. Right, one more question. So what process do you have to qualify leads, right? Is it A, ad hoc? I mean, you've hired great people, you're paying them well. Why not just leave them to it, to manage? Do you have a systematic process, maybe supported by tools that guides people? Or C, do you both have a process, tools? Do you manage it? Is it adhered to by everyone? Is it now part of ways of working, right? Business as usual. So it'd be interesting to get your perspectives on this as well.
So
Ben says B. Dave, too much A. Low on resource, spinning too many plates. Would prefer a more focused approach.
Yeah.
Any other thoughts, contributions? Typically, we see aspects of B. We rarely see C when we're engaged with clients, and sometimes B isn't even there.
Yeah, absolutely. And it's
sorry, it's Katrina. Can I just ask a quick question? When you say you rarely see C, and especially tracked across the company, can you elaborate on that one, please?
So when you say tracked across the company, so you've got a process. The salespeople adhere to it in terms of the way the value of customers is defined and the way they adhere to that. The sales manager meetings use this use these definitions and do track. And this gets reported all the way up through the organization. So it's, it's yes, the salespeople are trusted to go out and do their job, the job that they're hired for. But it's, there are guardrails and it is monitored. And we do see it. We do see it like that. But it's generally generally come across an A or a B. And that may actually even be the stage of the companies that we're supporting.
Thank you.
A few more comments just in there as well. Marek, just to let you know, Graham, thank you. Lead gen agents starting the process. So that's good to know. And Andrew Dowding, a mix of A and B, not C, and not really structured. And Adrian, currently A, in previous lives, C. And Kimberly, thank you, Kimberly, also in C. So actually, so not also, in C. So there is a systematic process where you are, Kimberly. Thank you.
Great.
Real mix.
And we'll come with a point of view on lead scoring later on in this webinar. So we'll come back to this, but thank you very much for your feedback and discussion. So what we're going to cover today is looking at market mapping, understanding your market and appropriately targeting. We're then going to look at what we call sales and pipeline management, which some of this lead scoring discussion comes into that, and ensuring that you are going to be fulfilling your forecast. And then finally, we'll look at customer profitability. So you've got a lot of customers. Not all customers are equal. Okay, and we'll be looking at that and the decisions that a bit of analysis around that can drive.
Thanks, Marek. So one of the things that we've done in previous webinars, and some of you have been on them, is actually talk through a concept, but then rather than us talk it, is even better, bring in a client who has actually utilized this sort of approach. It's just, we've had good feedback that it's been much more sort of powerful talking through a live, but obviously sensitive around confidentiality and the rest, but a live example. So I'm going to now introduce to present the slide for us, if you'd be so kind, Mark Jennings. So Mark is a sales director that we've had the pleasure of working with in the last year. And Mark, over to you.
Hi, good afternoon, everybody. As Wayne said, my name's Mark Jennings. I'm the Sales and Marketing Director for an industrial components manufacturer operating in critical markets, predominantly energy industry. Obviously, the product that we supply can go into many different markets. And subjectively and anecdotally, every salesperson's got an option or a thought process of which markets he wants to go into and what benefit this would be for the business, and this has been sort of overlaid against a diversification project that we were actually doing at the time that BFG helped us with as well, which both identified white space but also diversified us from some of the traditional industries that we were in at the time for the longer term. So coming back to this, obviously our product can enter into various different markets, but what we did is we basically brainstormed with Wayne the core markets that we thought that we had a good opportunity with, and looked at those in detail. In the top right hand corner, markets 1 to 4, possibly 5, that indicated that there was a general core business which is attributed to our other businesses. So predominantly, we had a client base that were already active within this space, maybe in a traditional industry, and they were diversifying themselves. So we knew the people to speak to, we knew the direction, we knew the partnerships, they knew us, we had the critical approvals and everything else that was to go with that type of work. And it was merely a case then of migrating with the client into their new business sectors. So that obviously was very easy to unlock. The benefit of the company, these were all significant majors within the energy industry with significant spend. So they end up at the top right hand corner of the graph, and obviously we pursued that through our sales channels. Coming back on the left hand side, markets 12 and 8, and this is predominantly where the focus and the enablers come in, is identifying opportunities where we potentially see a significant benefit to the business, either in the short term or long term, financially or strategically. But we're going to need some heavy lifting to get into there. And obviously, people were talking earlier about lead generation and teams and what have you. We have a business development team that would have to go out and invest significant amounts of time, resource, marketing, etc., to deploy these. But it's well worth our long-term benefit because the payback is significant, and I think that covers some of the points that were made earlier. Obviously, we've got some short-term wins as well, down the 7, 6, and 11 markets, where they're easy to unlock. They're probably attributed to, again, the current client list that we work with, but the yield or the benefit to us as a business is not as significant. And then obviously towards the left bottom is the further that you move towards that sort of space, obviously it's really a question of do we just make the decision to discount that market? And that's basically how we overlaid this, firstly through assumption, but working with Wayne and the BFG team, researching these in far more detail, these sectors, rather than anecdotally, and then consistently moving these dots around as we learned more about the new markets that we went into. And then that obviously then gave us quite a clear strategic strategy to move forward. Like I say, with the green areas being looked after by conventional sales teams, but maybe with a little bit more training on how to diversify into these new markets. It launched the business development team in relation to long-term growth aspirations and markets. That obviously then feeds into things like financial budgets, capability manufacturing capability, so new asset production, new strategic stocking of materials, etc., etc. And that's basically how we built this together. And it's a program that was done probably over a year ago now, Wayne, probably even longer than that, more nights. But we're still transitioning through this process. We've had some wins in relation to the green dots, well, significant wins in relation to the green dots, and that's obviously driven our short-term growth. But we've also had some significant wins on the yellow spaces as well in markets 12 and 8.
Great. Thank you very much, Mark. Brilliantly described. It's as if it was yesterday. It was literally, I think we went through this in a few iterations, but it was the middle of 23. So yeah, about 15 months ago. Great. Thank you, Mark.
Appreciate it, Mark. It brings me actually on to the next slide. As you mentioned around, what evidence do you have to support this, where the dots are, what you should do with the companies. We find that there's a whole spectrum of information that companies have, whether it's hard data, sales data, share data, market research, or what's in salespeople's heads. There's a lot in salespeople's heads that often doesn't get written down, doesn't get shared. But what ideally, you would be, if you look at this table, you'd be very informed, you'd have lots of information, and you'd use that and be very focused as well as in terms of where you're going to be spending your time and what you're going to be doing. Different companies, different prospects, information, markets defined, by geography, what's different by geography, what's different in terms of products and services, and actually differentiating the customers and prospects, even if they might look on the surface quite similar. Market potential, customer share of wallet, anything about competitors, environment, and then what are the right customer-centric strategies that you need with them. So, you're not always going to be in this top right quadrant, but it's amazing how much information is in the company and that isn't actually used. And we find out all the time, and that's a lot of what we're trying to do with our engagement is elicit that information, however qualitative it is, and make the best use of it. With a caveat. There is, if you look on the left here, the famous Albert Einstein quote of, I would, if I had an hour to save the earth, spend 35 minutes defining the problem. Some people do go down the route of sort of paralysis by analysis. You can engage people, and they love to go in, use the data, use everything. And on the other hand, you've got lots of salespeople, typically, that just do it, right? They're just out there, they're instinctive, maybe ends up with a bit of a scattergun approach. I think our BFG philosophy is somewhere in the middle, which is whatever we do, we want to drive action. We want to drive swift and effective and right action. So we believe in planning. We believe in looking at the information you have, but there's a big so what of how is this going to change your behaviors? How is it going to change what you're going to do with customers tomorrow, next week, whatever it is. So yeah, that's the SAS philosophy too. Some planning, get on with it. Here's another way of looking at customers. Right, sometimes salespeople go in and they not necessarily not differentiating customers enough, but also not thinking about where's that mutual importance. Where are customers coming to us and looking at us and thinking, you know what, you're our strategic partner. You've got the right products, you've got the right ways of working, you've got the right contacts, whatever it is, whatever it's important. It's not necessarily a one size fits all in terms of what's important to customers and which ones are important to us, right? So if you look at number one, not that these customers not that important to us. We're really important. We're critical, whatever it's the product, the service, or whatever it is. But you know what, it may be low value to us, or whatever it is. So what do we do there? Okay, it's our opportunity to exercise control over them, right? I mean, it's a nice position to be in, maybe with the right pricing, the right terms, conditions, things like that. Number two is a really, really good position to be in because we're mutually important, right? So here it's about really understanding your customer, make sure we're aligning our strategy, right, for the long term. Number three, they are very important to us and we're quite important to them. How do you redefine? How do you move up the value, for them? Thinking about the share of wallet you have with them, thinking about, is there anything you do about your products and services, the way you work, your terms, just to elevate your value within there. Number four, very important to us, not very important to them. Unfortunately, this could end up being a price game, right? You just have to, you've got to do what you got to do to get in there. But can you elevate yourself? And I guess that's the point, is there any opportunity to elevate your value in some way? And last time we were talking about pricing. I think in a couple of seminars from now, we'll be talking about the right products and services. And these are all the levers that we'll be pulling. You, Wayne.
Thanks, Marek. So one of the things Marek alluded to at the start through that question, and you kindly contributed your perspectives on it, was what's the kind of scoring process, or indeed what is the process towards qualifying? And so what we find is helpful is to literally score. It's often possible to literally add a scoring matrix to it. Now, this can look exactly like this in Excel, so a list of prospects could be scored in accordance with this sort of matrix. And I mean that the criteria that you put in are entirely up to you. And I've personally used this where it's gone into an Excel-based qualification. So you might have a database of 1,000 prospects, and starting to put some kind of criteria against them allows one to score. Or indeed, it can be more systematic. So if you've got a CRM system, you can build it in, and depending on the CRM system, it has to be done in different ways. But we've done that as well with clients where we're able to actually get the CRM system to qualify leads and only then produce the leads which fall into a certain banding, again, which can be completely defined. So we can think about the potential for the organization, whether it's size, whether it's strategic fit. We can think about how easy it is to convert, so the relevance of our offer, or maybe even a little bit of history, and even things like the time dimension. If we do know what the likes of contract expiration dates are like in a contracted world, that's really helpful to know. If they're not going to be out to contract for another 24 months, it may be that we deprioritize them. Of course, we may not. We might want to get there ahead of the RFP, as it were. But just a simple methodology, again, can be systematic in a CRM system, can be more of the pencil rather than the expensive pen, and put it through an Excel treatment as well. Back to you, Marek.
Yeah, and on that, with the lead scoring, of course, you actually get some quantification here, should we say? I mean, what I've got here is just an example of a weighted pipeline, and the key word here is weighted. We see a lot of pipelines where the whole list of prospects, potential project value against them, and you look at that and go, it's going to be a good year this year. It's going to be a great year, in fact. And then when you start digging a little bit deeper, people say, well, yeah, well, you know what, this opportunity, number 6, we're not going to land it. We're not going to land it. It's not going to happen, Okay, so it's not quite as rosy. So there's, with scoring, you can actually, put some weight on, what's the likelihood of landing, and you could different criteria on that, and then compare that to your forecast. So if your forecast says, in this case, our forecast says by the end of the year we're going to sell £350,000. Great, you might have a big pipeline which says, actually we might sell 500,000. Once you start weighting, you start looking, well, actually, the probability of us landing some of these things means that we're not going to hit our forecast. Fine, those are numbers, right? It's what that then does in terms of a change of behavior. Do we need to do something different? Do we need to put some more resources on the key opportunities? Do we need to try different channels? What is it? Do we need to go out and find some more prospects? And all of this, I know, whether it's the lead scoring Wayne was talking about, it's just giving you the intelligence to steer the business before you hit the cliff at the end of the year and you fall off it. So and again, same thing. Sometimes you see this in Excel, sometimes you see this in CRM systems. There are lots of different ways of doing this well.
We're going to talk about this in a lot more detail in a few weeks when we cover performance management. But again, really important to have and measure your funnel. So you'll start with your leads, and you might segment those into marketing and sales qualified leads, depending on the contribution that marketing plays within your organization, and depending on how sophisticated you can be at segmenting leads by source, which become contacts, people that you're in touch with to pursue, which in turn into opportunities with proposals against them, which in turn convert into deals and then hopefully ongoing recurring business. And it's super important, but few of our clients do this really well, to measure the percentage conversion from stage to stage, and just keep ensuring that those metrics are heading in the right direction. And there's a number of different interventions. We put a few here on the right-hand side that you can take to drive up those metrics. Next slide, Marek. And once you've figured out who your target markets are, and within those markets, your current customers and your prospects, that's not enough. You have to keep peeling the onion and go a stage further and figure out, what does my ideal customer profile within the organization look like? I'm not going to go through this slide in detail, but typically what you'll have is somebody who makes the decision, somebody else who might write the check, who may be an influencer, and then you might have the people who are actually using whatever it is that you're providing on a day-to-day basis. And they'll all have somewhat different decision criteria. And therefore, against those decision criteria, our USPs need to be refined and articulated in a different way to land with the respective cohort of customer profile. And in order for those USPs to land effectively, we might need to tailor our interactions in different ways, supported by different collateral. So if you're not already doing this, I would encourage you to really think about your profiling your ideal customer at a human, at an individual level, and work through some kind of template that might look something like this to figure out what's really in it for them and how we're going to get that message across most effectively.
Thanks, Andy. Just a very quick one. We'll be going into products and services in a later webinar and talking much more about cross-selling and the share of wallet. But whilst we're talking about interactions with customers and really getting to grips with understanding customers and profiling and everything like that, there's this old story, I'm sure you've heard it before, of the blind people touching an elephant, and the one who touches the tail thinks the elephant is a rope, the one who touches the tusk thinks the elephant is a spear, the one who touches the body thinks it's a hard wall, right? So they're all interacting with the same elephant, but they perceive it differently. And it's the same thing with us going to customers. Depending on who you're dealing with, you perceive that company as behaving in a certain way and valuing certain things. And the customers do the same thing with you. In a previous life, I worked in a consultancy where I was going to customers trying to sell, this kind of work, sales effectiveness work. But they knew us through the people they'd worked with before in our company as a competitive intelligence supplier. That's it. They were like, why are we talking to you? Why are we talking to you on this? You don't do that, do you? And that's an insight in itself. And what that told me was I'm either talking to the wrong people within that company, or they need educating in some way to understand the value that we can bring that's outside of their experiences. And it goes both ways. It goes both ways. But it's that whole thing of let's really understand, to Andy's point, the customer profiles and understand the value and the market, etc., etc. But we'll go much more into these topics, cross-sell and share of wallet, later webinar. Finally, customer profit concentration. This is a very, very, very common graph that we see all over the place every day. You have your customers listed in terms of order of how profitable they are to you. This one, the first customer provides nearly 30% of our profit. Great. And then this tails off, right? So, 80% of our profit comes from 6 customers. Another 5 customers adds another 15% of profit. Ooh. Then you've got 16 customers that only add 5% of profit. And finally, you've got this tail of 10 customers that actually erode. They're losing your money. I mean, you could even say that these previous 16 are just taking up your resources that could be spent better. But this isn't necessarily just about chopping customers off. What does it tell you that you can do? What can you change in your approach and your operations? Sometimes these customers on the right, these poor ones, are given to your B team, your B delivery team. I've seen that many, many times. This first customer, these first ones on the left in the green, they get the A team. The others get the B team, and the B team doesn't get the resources that the A team gets. And so it's it's a chicken and egg thing, right? So again, it's there for you to think about what can you do to increase profitability. Anyone else have any thoughts on this one?
Just one to build, Marek. I talked about this a little bit last week for those of you who are on that, but it is possible to run a a sort of a project focus on this, and got experience of that, and it's a kind of up or out approach where some of these in the red are losing money. So an option is to literally send them a letter and say, thank you very much, we're ceasing to trade. But before that, the particular project we ran was we looked at what were the opportunities to actually upgrade them. What were the opportunities to give them an additional or an enhanced offering at the same time as we got an enhanced value from it, ideally profit, an improvement in profit as a function of doing it, rather than just go with a straight price increase, which would probably it would be the equivalent of them just leaving us anyway. So running it as an actual project is quite a nice way to do it, and you kind of can't fail, because if you end up losing them, well, you're probably going to make more money anyway. But if you can actually enhance them, they're more sticky, and it unlocks some potential you may not have seen with them probably having been neglected even by you as a business as well.
Yeah. And it may not be as simple as, look, they're unprofitable, get rid of them. It may well be that they are strategically important to you for the long term, for whatever reason it is, the way you position yourself in the market. But it's worth not just letting that go. It's worth looking at it as
yeah. I think just to finish on that, Marek, I'd say in the red, one thing we did in that particular project massively was understand why.
Yeah.
First of all, why are they actually in that stage before just kind of firing off in a particular direction.
And I would just add before you move on, Marek, to close, that typically when we go into client organizations, there is not enough understanding of the amber and red. They don't appreciate the hassle, the erosion that the ambers and reds are actually causing, because the focus is so much on the greens and the yellows. And many organizations are surprised when we come back to them and say, well, you're doing great with your greens and yellows, but some of it's being eroded by these reds. Just very, very quickly, very briefly, we've covered one dimension today, right customers and prospects. If you do everything that we've just covered on these slides absolutely brilliantly, it's not enough. The other dimensions come into play again, and I just really feel it's important to reinforce that point. And if you take one example, incentives, the incentives can lead to more reds than greens, because you might incentivize a rep on revenue, and that rep might therefore drive down the price if they're empowered to do so, and get the business in at all costs. And often that might translate into just a marginally profitable deal for you. So unless you address incentives and in this example, refocus the rep on margin or profitability, for example, then you can do all the analysis and all the great stuff on right customers and prospects, but not execute effectively enough.
Okay. Finally, before we close, we do a survey, and we score companies against these dimensions. Right customers and prospects is one of those ones that often gets scored low. Within that, things like having the right customer profile, understanding share of wallet, customer concentration are the elements within that actually score the lowest. We also find that it correlates reasonably well with products and services, as in if you're identifying the right customers and prospects, you're taking the right products and services to market, and vice versa. If you're doing one badly, you often do the other one badly. And there are other interrelationships here that we can go into in more depth at another time. I know some of you have been on these webinars and have seen this already, but for those who haven't, we do something that's called a BFG grade survey. So it's about 60 questions, takes about 20 minutes to do, covers these 12 dimensions, and it's a self-assessment. You do this through a online survey. We get the results, we crunch the results, and then we can have a 45-minute, no obligation call with you where we can discuss your scores, where you are high, where you are low on particular questions and dimensions. And we can put together some observations and some recommendations. So for example, here in this one, this company scored very low on the right channels. And there was some, there were some things here around who's actually bringing the offering to market and how and that sort of thing, which we had some recommendations around. Finally, it's actually really valuable. We found, we've done this quite a few companies, if it's not just one person assessing their own company. In this example, there was a CEO, a CTO, a finance director, and a bunch of sales directors and sales managers. All did the same self-assessment of their own company, same company, completely different scores. And that's fascinating. That opens up all sorts of discussions in terms of, why one believes one thing versus another. And yeah, very happy. If anyone's interested, just drop us a line. We can send you the link to do this. Just teeing up next week. Next week is about channels. So we go through channel cost to serve. So one size fits all for customers at channels. So thinking about what's the most appropriate channel, both in terms of effectiveness and cost for your different types of customer segments. So look forward to discussing that one with you next week.
Thanks, Marek. So again, just in closing, please diarise through Friday, the 13th of December if you'd like to join us on future webinars. The schedule of them is on our website, betterfastergrowth.com/events. Ask us if you'd like to take the Better Faster Growth grade self-assessment. And if you'd like to schedule a call with us to discuss any issues or challenges that your business is facing or your portfolio companies are facing, then just please let us know. You're free to leave, but you're also free to stay if you've got any questions about any aspect of what we've just rushed through. We deliberately keep these webinars brief because we know that you've got a million things on your plate. But if there's any aspect of what we've covered that you found interesting, confusing, you'd like to understand a bit better, then by all means share now if you'd like to.
I'll have a little share if I may.
Hey, Lisa.
Seeing as Wayne was desperate to see me.
Hi, Lisa.
That was really, really interesting and really useful and really resonated with me on a lot of levels. The bit that I wanted to just contribute to, if I may, is the bit around profiling, so customer profiling. So I run a business doing lead generation on behalf of other businesses. And for me, what's become really important in the last 12 months in particular is understanding the roles that those people occupy. So I am contacting an organisation asking to speak to a role rather than a person, because there's been lots of changes in the roles and how people describe themselves. So people are no longer called HR directors, they're called head of people and that type of thing. So it's become really important to understand roles that decision makers occupy and to understand the language and the terminology that businesses now use to describe those positions, because it's quite embarrassing when you phone a business and asked to speak to the HR director or P&O director, whatever you want to call them, and they say, oh, actually, we refer to them as the head of people. So just wanted to say that my experience has been that the role is more important than the person sometimes.
Yeah. Great. Thank you, Lisa. Yeah, that really resonates, actually. Really resonates, especially the piece around language. You know,
Yeah,
it alienates, but
absolutely.
it can also be a real positive then to get a bond with them, if you like, get a connection.
Absolutely, really, really important. And I think that it just really demonstrates, well, it elevates your status as being, you know, somebody that has done your research and has actually taken the time to understand the roles within that particular organization and the language that they use to describe them.
Super. Thanks, Lisa.
Any other observations, comments, questions?
Yeah, I like the balance of having the target with the percentages on. I'm always an advocate of doing that. I never know if it actually pans out in real life, but I think it makes sense from a logical perspective. I'm interested to know, do you think the numbers kind of stack up over a year? So if you kind of say I've got 10 at 10%, does that kind of ring true ultimately?
If you review it, if it's part of business as usual of in your weekly, monthly, whatever meetings you are reviewing it. The danger of a lot of these things is it's like with account plans. You do them at the start of the year, you put them in your drawer and you forget about them and you've done them as a box ticking exercise. Then it's garbage in, garbage out, right? But if it's part of the way you're thinking, then yeah, you're trying to steer it all the way through to the end.
Like I say, like the logic behind it makes absolute sense to me. But yes, it's the practical application as ever is the challenge, I suppose.
Yeah.
Good. Well, I'm mindful that we're overrunning. We're outstaying our welcome with you. So thank you all. Hope to see you next Friday. We're going to be discussing channels, as we said. And the BFG team wishes you all an amazing weekend.
Thanks, everyone.
Thanks, guys. Thank you.
Thanks all. Have a great weekend. Bye.
Bye.
Take care.
Thank you.